Datavault AI is currently trading at 0.64 cents in the middle of a volatile Monday session on February 2, 2026. The stock is down roughly 4.5% as of 11:08 a.m. Eastern Time, following a morning high of 0.66 cents and a low of 0.63 cents. While most people are staring at the decimal points of this penny stock, the real story isn't the price. It is the massive divergence between the company's aggressive revenue projections and a sudden, violent spike in short interest that hasn't been seen in months. The common narrative around Datavault AI right now is that it is a high-risk, high-reward play on the intersection of artificial intelligence and Web 3.0 technologies. Investors see the flurry of January announcements, including a partnership with Sports Illustrated for an athlete digital asset exchange, and a memorandum of understanding with St. John's University in Taiwan for real-world asset tokenization, as signs of a company rapidly scaling its footprint. The popular belief is that these deals provide the fuel needed to reach the ambitious 2026 revenue guidance of $40 million to $50 million, a target that management recently suggested could even be eclipsed by a newer $200 million projection linked to their national node network rollout. However, a deeper look at the market behavior suggests that institutional players and short sellers are betting on a complete failure of this narrative. Despite the stream of seemingly positive press releases throughout January, the stock has been in a steady decline. This is a classic sell the news environment, but it is being amplified by structural pressures. Short interest in Datavault AI surged by 54% in the first half of January alone, reaching over 65 million shares. That represents roughly 12.4% of the public float. What is even more telling is the institutional positioning. While Vanguard and Geode Capital have increased their holdings, likely due to index inclusions or passive rebalancing, massive insider selling has hit the tape. In the last 90 days, insiders and major shareholders have offloaded more than 31 million shares, totaling over $32 million in capital pulled out of the company. When a CEO talks about a $2 billion revenue target for 2027, while directors are liquidating tens of thousands of shares, the market notices the friction between words and actions. The current price action is also struggling against heavy technical resistance. The stock is trading well below its 50-day moving average of $1.17, and every attempt to rally on news has been met with immediate selling pressure. Volume has also started to thin out significantly from the massive hundreds of millions of shares days seen in early January. Today's volume of about 12 million shares suggests that the retail engine that was driving the hype may be running out of steam, leaving the stock vulnerable to the methodical pressure of short sellers. Firms taking these short positions are likely looking at the company's fundamentals, which remain precarious. Last quarter, Datavault reported a negative net margin of over 1,300% and a loss of 33 cents per share. Critics of the company point to the going concern disclosure in recent filings as a major red flag, suggesting that without constant infusions of capital through equity sales, the business model may not be sustainable. This brings us to the short thesis. Short sellers are betting that the revenue targets are purely aspirational and that the company will continue to dilute shareholders to keep the lights on. They point to the borrow rates, which can spike when shares become hard to find, as a key metric for retail to watch. If you see the borrow rate on your brokerage platform jump into the double digits while the price is stagnant, it often indicates that shorts are doubling down despite the cost. Retail investors often look for a short squeeze in these scenarios, especially with a 12.
To understand why this company exists in the first place, you have to look at its core business model. Datavault AI operates as a data monetization and tokenization platform. They use proprietary AI agents called Data Value and Data Score to help businesses assign a financial value to their data and then trade it as a digital asset. Their focus is on the proof economy, where every piece of data is verified and authenticated on a blockchain. This includes everything from sports analytics to medical records. They recently acquired API Media to bolster their digital engagement capabilities and are pushing hard into the edge computing space with their Sanctum AI platform. The goal is to move AI processing away from the central cloud and closer to the source of the data, which theoretically reduces costs and increases security. Despite the technical sophistication of the product, the financial reality is a series of massive net losses. The company is currently in a race against time to turn its strategic partnerships into actual cash flow before its cash reserves dwindle. The $15 million in convertible debt financing they secured last year provided a temporary cushion, but the market is now demanding proof of revenue rather than just targets. Retail sentiment on platforms like X and various investor forums is highly divided. One camp believes the stock is a multi-bagger hiding in plain sight, citing the $4 price targets from some analysts. The other camp views it as a dilution machine that uses flashy press releases to keep the share price high enough to sell more stock. Looking forward, there are several possible scenarios. If Datavault AI can report a significant narrowing of its losses in the March 30 earnings call and show that the national node network is actually generating fees, the shorts could be forced to cover, leading to a recovery toward the $1 level. However, if the earnings report shows continued massive spending with no corresponding revenue growth, the stock risks falling toward its 52-week low of 25 cents. The upcoming launch of the sports-focused exchange in the second half of 2026 is a major catalyst, but it is still months away. In the meantime, the stock is likely to remain a battleground between high-conviction retail holders and institutional shorts. Responsible investors should look for specific signs of health rather than just price spikes. Watch the fail-to-deliver data, which can be found on the SEC's website, to see if short sellers are struggling to settle their trades. A high number of fails often precedes a period of forced buying. Also, keep a close eye on the Form 4 filings for any signs that the insider selling has stopped. If the management team starts buying shares at these levels, it would be the first real signal that they believe the bottom is in. Without that internal confidence, it's hard to expect the broader market to step in. In summary, Datavault AI is a case study in the gap between technological vision and financial execution. The reality of 2026 for this company is defined by a massive jump in short interest and a management team that is selling shares while promising a billion-dollar future. The price of 26 cents reflects a market that has become skeptical of AI plus blockchain buzzwords and is now demanding a balance sheet that makes sense. The tension between the buy rating from Maxim Group and the sell rating from Weiss Ratings perfectly encapsulates the uncertainty here. Whether you view this as a discounted entry point or a falling knife depends entirely on your belief in the company's ability to hit its H2 2026 targets. The expectations for a rapid recovery have been tempered by the reality of institutional liquidation and short pressure. As we move closer to the March earnings date, the volatility is likely to increase. For now, the shorts are in control of the trend, and it will take a significant verifiable financial win to change that momentum. The stock remains a high-stakes bet on the future of data as currency, but the current path is paved with more questions than answers. Would you like me to analyze the short interest trends for another company in the AI sector, or should we look at the institutional holdings of a different penny stock?